a different type of income and how it's taxed. By the way the trends are going and what we're seeing here at the office, this type of income is popping up more and more. But before we begin, I first want to give a quick caveat that some of the tips that we discussed today will be general rules of thumb that we give to our clients. They may or may not apply to your specific situation. To find out more about your specific scenario and how to best plan, you'll want to sit down with a tax professional for some individualized guidance. But we'll talk more about that a little bit later on. So today we are going to discuss 1099 income, which is filed on a Schedule C with a self-employment tax, okay? This type of income can be very beneficial to a taxpayer if they know how to handle it correctly. The biggest thing about 1099 income is that no taxes are paid on you all throughout the year. You are 100% on the hook for your entire tax balance due by the due date of April 15th, okay? You are also on the hook for all the Social Security and Medicare taxes along with your federal income tax as well, which that can add up very quickly. Now, that sounds terrible, but 1099 income can be beneficial also because overall you may end up paying a lower amount in taxes because you get deductions that you cannot take as a W-2 employee. Okay, this type of income is where you will start to see the value of a very good tax preparer who cares about your situation. As honestly, you'll see that many deductions that business owners and side hustlers can take that they may not realize are available, a good tax professional will bring those to your attention, bring those to your remembrance throughout the year. Overall, you may end up seeing that you end up paying less in taxes overall by being paid by 1099 than you would have been by being an employee. The problem though is that we continually see a lack of preparation to pay that lower amount, which usually ends up with a taxpayer getting stuck with a larger lump sum amount due to the IRS at the year end. When we file their tax return, along with underpayment penalties and interest that they could have avoided had they been more educated about how to pay taxes in smaller amounts throughout the way, okay? Now, these smaller tax payments that we're talking about where you can prepay your tax due for the April 15th are called estimated tax payments, okay? And I'm sure that sounds wonderful to you, and they really are a headache for most people, but when done correctly, they can save you a lot of hassle. They'll probably something that we're gonna actually make a whole standalone video on later on in this series. But for right now, though, with the growing, we just want to touch on this. With the growing side gig economy, we are seeing more hybrid situations than ever, where a taxpayer has a job, but also brings in some side income as well on the side, via 1099. If that is you, you will really want to sit down with a tax preparer and bring in a prior year tax return and the accounting that you have done for your side hustle, your business year to date, and let them work with you on how to best plan to take care of your tax burden, which might be estimated tax payments, it might not be. Just hard to give concrete guidance over a video. But here at Shockley's, we do offer a free first time 30-minute consultation where we can do just that and answer any other questions you may have. And with that, we'll be signing off for today. And until next time, see you then.